The CPF is a powerful tool to prepare for your retirement because 1. You will get up to 6% guaranteed returns every year, and 2. You will get tax reliefs for topping up to CPF. Like very good deals, yeah? Because of this, there are movements such as 1M65 that advocate using CPF in order to become CPF millionaires, not just for couples, but also for babies. In fact, some of our fellow Singaporeans like Chris from Honey Money SG have already achieved the full retirement sum at a super young age of 30 years old. But then, the question is, when is the best time to achieve FRS? Should you try to achieve it as early as you can? Or should you slowly take your time and only achieve it by 55 years old? And that's what we are going to explore in this video. But before I start, do join my 7,000 members Telegram group to discuss or ask any questions that you may have. First up, here's why CPF is such a great tool for retirement. So let's say you turn 55 this year and have achieved the full retirement sum of $205,800 in 2024. 10 years later, when you retire, you will start receiving a monthly payout of $1,670 under the CPF Life Standard Plan. Is this amount enough for retirement? According to the Minimum Income Standard 2023 report, it was found that a 65-year-old single elderly would need to spend $1,492 a month in order to have a basic standard of living. Now, of course, this is for 2023. So, if we fast forward by 10 years, assuming Singapore has an average inflation of 2%, the expenses will go up to $1,818 a month. Now, even though the $1,670 payout is not enough to cover the $1,818 monthly expenses, the good thing is that a huge part of your retirement expenses has already been taken care of by the CPF. So, we can all agree that it's good to achieve FRS. But then, the question is, when is the best time to achieve FRS? Let's first talk about the pros and cons of achieving FRS early, starting with the pros. First, by achieving FRS early in life, we won't have to worry about the FRS anymore. That's because the retirement sums are based on the person's expenditure from a lower income household. That's why as the cost of living increases and as the standard of living becomes higher, the retirement sum will also need to be adjusted higher in order to account for that. So from 2014 all the way to 2027, the rate of which the full retirement sum had been increasing has ranged from 2.76% to 4.73%. And since CPF SA and RA pay anywhere between 4 to 6% interest, the interest paid will either be on par or outpace the rate at which FRS increases. So if this trend were to continue, and if you are able to hit FRS today, you will still be able to maintain the FRS even if you stop contributing to your CPF SA and RA. But of course, as long as you continue to work, your monthly contributions to CPF SA and RA will continue to grow and exceed the FRS. So long story short, once you hit FRS, you will no longer need to worry about FRS again, assuming you don't lose money from investing your CPF SA, of course. And now, a word from today's sponsor, Weibo. If you are someone who can only invest like $100 or $200 a month, you may find some of your favorite stocks to be too expensive to buy. Then how? Here's where Weibo can help. Because Weibo supports fractional trading for the US market, this makes investing a lot more accessible to individual investors like you and me. So for the US market, instead of having to buy one entire share, you can now buy with as little as $5 or 0.01 share. To trade fractional shares on US stocks, all you need to do is change the order type to market order. Then, you can switch between buying in US dollars or in amount of shares. As for the Singapore market, what you can do is change the lot type to unit share. And now, you'll be able to buy with as little as one share on eligible stocks. And to make this even better, Weibo makes investing super affordable as they have one of the most competitive pricing on the market. For US stocks, they are only charging 0.025% of the trade amount, with a minimum of just 50 cents. And for Singapore stocks, it's just 0.05% of the trade amount, with a minimum of $1.60. Or if you are a new user, you will get to enjoy 3 years of commission-free trades for the Singapore market and 1 month of commission-free trades for the US market. If you are someone who doesn't want to look at the share price every other day, you will find Weibo's regular savings plan to be helpful, as it lets you set up automatic investments over a certain period. This allows you to dollar cost average into US stocks, thus making sure you are consistently investing on a regular basis while minimizing the impact of bad market timing. To enable regular savings plan, You can open up the stock that you want to invest in, tap on the 3 dots on the bottom right, then tap on regular savings plan. And you can start investing with as little as $5 or 10 Singapore dollars. What's nice is that Webull even lets you deduct the funds directly from your bank account, thereby saving you the hassle of manually transferring the money over. After that, you have the option of automatically investing every trading day all the way to every month. Anytime you wish to modify your order or cancel your regular savings plan, you can just head over to Markets, look for RSP, tap on your RSP order, and here you'll be able to modify or cancel your RSP. Right now, Webull is running a very generous sign-up promotion. If you sign up using my link down below, make an initial deposit of $500 or more into your account, you will first get 5 free shares worth $10 to $500 each. Then, if you complete 5 buy trades of US stocks and ETFs with each buy trade worth $100 or more, or options within 30 days of funding your account, you will get 30 trading vouchers worth $450 in total. Webull has also upsized their Money Boost promotion, where if you are able to activate and subscribe at least $250,000 to Webull, fulfill the requirements and maintain the funds for 1 year, you will get to earn $5,000 worth of free NVIDIA shares. Lastly, there's a new transfer promo from which you could possibly get up to $3,000 worth of free NVIDIA shares by fulfilling the requirements. So if you are interested in trying out Webull, do sign up to them using my link down below. With that being said, let's get back to the video. Second benefit, FRS provides us with a safety net for retirement. As described in the Kueh Lapis strategy by 1M65, the first step in your investing journey is to secure your retirement before you pursue other growth opportunities. So, knowing that you have already secured your retirement will give you the mental strength to hold your investments through volatile periods. Like your investments crash by 90%, okay lah, you'll cry a bit, but in the back of your mind, you know that even if your investments don't work out, you will have at least enough money to retire on. Third benefit, you know how when you use your OA money to pay for your housing, you will accrue CPF interest which you will have to pay back when you sell your house? By achieving FRS, the accrued interest from using your OA funds no longer needs to be factored in, since you have already hit FRS. That's because you will still be able to withdraw any amount above the FRS, meaning the money that you pay back in accrued interest can be withdrawn as well. But of course, there are downsides to achieving FRS early, because nothing is perfect, yeah? The first downside is that once you have hit FRS, you will no longer be able to top up $8,000 to your CPF SA to get tax reliefs. So when you earn more money later on in life, or you will have less one method to reduce your taxes. The second downside is that even though CPF Life gives you a steady POMPP payout, the payout is just steady POMPP fixed at the same rate forever. Meanwhile, inflation will continue to go up and the purchasing power of your payout continues to go down. And even if you choose the escalating plan where the payout increases over time, the payouts will only be more than the standard plan at 77 years old, when you become an old Abed or old Ama. By that time, the inflation will have far exceeded what the standard plan was meant to cover when you turn 65. Also, the CPF life payout is actually not guaranteed, yeah? It may decrease if more people live longer and if interest rates are lower than expected. Lastly, the other downside is that your money could potentially grow a lot faster if you had just taken it and invested it in stocks. So putting your money into CPF early in life comes with an opportunity cost. But how big is the opportunity cost that we are talking about? So Chris was able to achieve FRS by 30 years old because he was topping up a lot of money into CPF when he started working. I'm not too sure how much he was topping up, but let's assume that he topped up $100,000. So let's say I'm 30 years old now. Instead of topping up that $100,000 into CPF, that money is now invested into stocks for the next 35 years with a growth rate of just 7% a year. I'm using 7% because even though stocks have historically returned 10% per year on average, Credit Suisse projected that in the future, annualized real equity returns will decrease to 4% instead of the higher returns experienced by previous generations. And with that, boom, at the end of 35 years, you will end up with $1.67 million in your portfolio. With the 4% withdrawal rule, you will be able to withdraw $3,558 per month from this portfolio. On the other hand, obviously, we won't know what the CPF life payout will be like in the future. But let's assume the FRS payout increases by an average rate of 3.5% for the next 25 years, till I'm 55 years old. At 65 years old, CPF Life will start giving me a monthly payout of $3,946 every month. CPF Life gives a higher payout than investing in stocks leh. Yes, but you also need to remember that as the stock portfolio continues to grow, the 4% withdrawal amount from the portfolio will grow as well, while the payout from CPF Life is fixed forever. But of course, the fine print is that by investing your money in the stock market, the returns are not guaranteed, and you could even experience lost decades where the market does not go anywhere for many years. However, let's take a look at the more common scenario, as not everyone can hit FRS by age 30. Maybe they have a lower income, or maybe they have to use their CPF OA money to buy a house and no longer have any money left to transfer into SA. So let's say you are 24 years old now, starting your first job and is earning around 3.5k a month. Your salary is going up by 4% a year, and you don't get any bonus in your life because your boss is stingy. And you voluntarily contribute $8,000 to your CPF SA every year. Even if you're not transferring money from OA to SA, you'll still be able to meet the FRS when you turn 46. But let's try another scenario. This time, you prefer to wait till you turn 35 to start topping up into CPF, so that you get higher tax reliefs in the future as your salary gets higher. Assuming that you are now earning the median salary of $5,000 at 35, you can still achieve FRS by age 51. From here, we can learn two things. One, obviously, the earlier you top up, the more you will get the magic of compounding. But the more important part is two, even if you top up later on in life and have a median income or lower than median income, you can still achieve FRS as long as you top up consistently. What this means is that it doesn't make much of a difference as to whether you achieve FRS in your 30s or in your 50s. Okay, here are my thoughts. Personally, I feel that there's no right or wrong way to do this. If you prefer to secure your retirement first by hitting FRS early, then by all means, go for it. Though, by doing so, you will incur opportunity costs. But if you prefer to take higher risk by investing your money first, can also. In the end, the choice will ultimately depend on your own preferences and risk tolerance. Anyway, that's all for this video. Hopefully, you found this useful. Do let me know in the comments down below what you think, and don't forget to like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.